European rates up for you on your screen. It was expected to be a slightly softer start, and there you have it. Across the board, a cut of close to about 1/3 of a percentage point. So the mood is a tad bit cautious. Focus will be on the developments with respect to Brexit, with only 4 days to go before UK officially leaves the European Union. Today, UK Prime Minister Theresa May is expected to meet with the leaders of Germany and France. Then tomorrow, all 28 EU states will vote on whether to grant UK an additional Brexit extension. So the next 2 days will be exceedingly crucial, and the mood is a tad bit cautious ahead of that. And the indices there are down close to about 1/3 of a percentage point. But back to our own markets and shifting the focus to ITI. That's a stock which has gained close to about 6% in trade. However, in the last 1 year, it's still down close to about 20%. The company has released the FY19 provisional revenue estimates, and they're suggesting a growth of 20%. K. Alagesan, the CMD of the company, joins us on the phone line. Good afternoon, and thanks so much for joining in. First, sir, if you could start off by telling us what led to this 20% revenue growth in FY19, and what was the performance at the operating line for FY19?
No, I think 2051 crores turnovers we have made for that last year, and it is 20% higher than the previous year. And this is mainly due to that manufacture of smart energy meters and executing the order like BharatNet Phase 2 project, and also supply of ONT, OLTE manufacturing what you have done. And this is the thing we have got, and balance order available is now 6,330 crores, and we are having APO around 7,300 crores, and orders in pipeline is around 10,000 crores. Though we were supposed to do better than what we have declared, but some of the orders could not be converted as a PO. So hopefully this year it will be done. Since it is a provisional figure, I am not in a position to tell you how much profit and all. And it will be worked out, and maybe in the due course of time I will be in a position to tell.
But just repeat those order book numbers. One was 6,000, one was 7,000 crores, and then you said the total order book was 10,000 crores. So if you could just give us the split and also give us the total order book. Go ahead, sir.
No. Now, after achieving 2,051 crores, I have balance order available as of now is 6,330.
Okay.
The APO what we are having to be converted into PO is around 7,300 crores.
Okay.
And where we have already become L1, APO is not received, but you know that one of the orders, ASCON orders.
If you could explain that to us, sir, APO?
Advance purchase order.
Okay, advance purchase order.
Advance purchase order to be converted as PO, okay. So, then apart from that, we have become L1 in ASCON order, that is a defense car, 7,600 crores order. And Wi-Fi, we have become L1, it to be placed either APO or PO, that is around 2,300 crores orders. So both put together, it will be around 10,000 crores. This is our order book positions, what is expected to come.
Okay.
But while you can't tell us the exact EBITDA numbers, at least directionally, if you can tell us, have the losses narrowed?
As we are going to come for APO, so unless otherwise I have a final figure, I will not be in a position to tell. I only declared whatever turnover we have made to SEBI. So
okay.
APO is not there, then I would have definitely made some approximation. People are still working out.
Okay.
Yes.
All right. So, you know, I was just looking at your numbers in terms of an operating number. The last few quarters, in fact, you've been making an operating loss. All right. Now, as you tell us, since you have your results that will be coming up, so you can't really disclose whether or not you'll be profitable. But give us a sense about FY20. Firstly, on the top line, this year you've done a top line growth of around 20%. Can you maintain this sort of a run rate? Do you expect, you know, ITI to... Yeah.
Looking into that current order book position, definitely our performance will be better than
this year. So it will be better than... So revenues will grow by at least 20% for FY20 is what you're telling, you know, all our viewers as well as your shareholders. Is
yes, it should be. Because,
fantastic.
And that whatever order book we are having is a very comfortable order we are having. Keeping in mind, yes, it should not be a problem.
And what about operating profit? Can you return back in terms of operating profit for FY20? You expect it to be a profitable number?
Yeah, it should be. Seeing that, you know, again I'm telling, seeing the order book position, it should be, but it should be possible. That's what I can say.
Okay.
Possible.
What is the current net debt on your books, and do you have any debt reduction plans?
We are having a debt is there. We have to collect money from so many customers that we are continuously working.
Any numbers, sir? Your total debt? What is your the receivables which are due for you?
Receivables, if you adjustment, if you do it with whatever advance we have taken, it will be around 2,000 plus crores will be there. That will be, we are trying to reduce it. Whatever we have made a committee, even BSNL side also we have made a synergy committee, and we are trying to reduce.
Okay, and your net debt?
That around, madam, maybe the difference will be around 200-300 crores. That much range it is there. I have to work out because recently only I have declared. No, we have to find out how much we have built, how much unbilled like that. Yesterday only have come out the figure.
2,000 crores you're saying is the receivables, right?
Yes, around 2,000 crores.
How much of that can you receive in the coming year?
No, we are trying now. 50% we should be in a position to get. We should make it. Some of the debts are very old. Some of the receivables are old. So now we have made some committee. We are following it up with BSNL. We have synergy committee is formed with the ministry, and we are also regularly reviewing. So very old cases are there.
Correct.
So we are trying to figure out and do the things.
Can you break down your receivables? How much is owed to you by, say, a BSNL? How much from MTNL and the other bodies?
And 70% is from BSNL. Okay. 15% is from MTNL, and the others are around balance. Like that only it is there. Because business we have done, previously we have done more business with BSNL. Now, of course, we are shifting towards defense, we are shifting towards BBNL, we are shifting towards ESL currently.
Okay. You said you're shifting towards defense, is it?
Defense.
So how much, I mean, for FY20, what kind of an order inflow you can expect? It will be a smaller part of your business, right?
No, defense, I'm telling you, one order has to come. That is ASCAN, Army
approx how much?
Network. That is the order book. That order is around 7,600 crores.
Oh, that's a large order. If you get
that's
it,
a large order. 3 years we have to execute, and this order we are expecting maybe first quarter itself. We have been talking about. And we are pursuing with that. It is a process. It is the files are in the movement. It's a process.
In FY19, what percentage of your revenues came in from defense, sir?
Defense, it is not much. We have done around 200 crores. We have done in overall AMC, everything put together.
From defense, okay.
Okay.
Final question from my end. Any news from the government of India that they want to bring the stake down? I think it's at around 90%, right now?
Now that's why we are going for that APO. No? We are going for the APO. We are likely to hit the market by June.
Okay. And what is the kind of government grant that you've got in FY19, and what is your expectation for FY20?
Now, FY19 we have got only 50 crores we have got, and this next year, madam, we have to get it. We have to put up a proposal. We have to get it. Okay.
Thank you very much, Mr. Alagesan. That's the CMD of ITI. FY19 has been a good quarter. They've got the order pipeline looks pretty good, which makes the management quite confident about FY20 as well. The key is for the company to bring down their receivables, which stand at a little more than 2,000 crore rupees. 70% of that is actually owed by BSNL. So once that money comes in, some very old debts, that could be a big kicker for ITI. But let's move on to our new series then, Election and Market, in which we analyze how the past elections and the successive governments have dealt with issues around the key sectors. Today, we take a look at the power sector, its performance over the last 5 years, and the big issues for the next government. Over to Anisha for a check on how the numbers stack up.
Well, power sector has been making headlines the last few years, but not always for popular reasons. Now, despite policy initiatives, the beleaguered sector continues to be one of the biggest contributors to the banking stress. Now, over the last 5 years, the pace of generation growth has actually slowed down from 8% in FY15 to 4% in the 11th month of FY19. Now, the government defends this by saying that the decline is partly on account of use of energy-efficient instruments like CFL, LED, etc. But still, a 4% growth for a growing economy like India looks paltry. Now, even if you look at the PLF, which basically means the utilization level of a power company, that has declined from over 65% in FY14 to 61% in the 11 months of this year. And the fall is profound when you look at the private sector, because there the PLF have slipped from 62% right to 55.5% in the 11 months of this year. Now, remember, power is the one sector wherein we have heard a lot of big bang announcements, but the execution has been been subpar. Now, the biggest of them all was Uday, or the Ujjwal Discom Assurance Yojana scheme, which was launched in 2015 to turn around the Discom operations. Now, while the scheme did manage to narrow down the losses and saved interest costs to the tune of 34,000 crores, the actuals remain far from the target that the government had set. For example, AT&C losses were at around 19 to 21% versus the target of around 15%. Now, other schemes like Deen Dayal Upadhyay Gram Jyoti Yojana were launched to achieve 100% electrification, but it continues to be a part of BJP manifesto for 2019 as well. Now, in terms of other achievements, yes, India did improve its rating to 24 in World Banking's ease of doing business in terms of getting electricity versus 137 in 2014. And the government also did a lot to improve the last mile connectivity, and hence the transmission capacity improved tremendously over the last 5 years. And that is pretty much evident in Power Grid's capex plan as well. However, the resolution of the entrenched systemic issues are far from over. One of the big unfinished agendas of this government is the lack of improvement in the health of discoms. For example, the receivables from discoms continue to mount, and inadequate hikes in power tariffs as well as late subsidies from states have been attributed as the main challenges. Also, issues like inadequate coal supply and lack of new PPAs continue to be an overhang. Now, over the last 5 years, a lot has been done in terms of policy initiatives like Samadhan, Shakti, Parivartan to manage the banking stress, but hardly any progress has been made, and a lot of these projects continue to be stranded. As a result, the stocks also haven't generated much wealth. You can see on your screen, while the Nifty returned at an annual rate of around 12%, the power sector did not perform much. Back to you.